Welcome to a new update, and today we're going to discuss whether Bitcoin is in a bull or bear market, as we also know that the altcoins are not showing too much strength. Today they are actually bouncing up in the Bitcoin pair, but we've also seen some serious volatility on Bitcoin in the previous weeks. That's what we're going to discuss, and we're going to look into the markets in itself. We're going to dive into gold, we're going to dive into Brent. We're going to have an all-round view of the markets at this stage. But before we're going to continue, make sure to subscribe beneath, like this YouTube update, and also check out my Twitter and Instagram, where you can find daily content on the markets from my side. We are living in a crazy world. Like yesterday, we have been seeing some numbers in the Netherlands where they said, hey, your purchasing power is dropping by 2.7% year to year. While actually it was quite funny. They said that during the news show, and they said your purchasing power is going to drop by 2.7%. And the immediate shot afterwards was a woman who stated that her energy bills were going up 2x from last year to this year. That is not 2.7%. If your purchasing power is dropping by 2.7%, you are not going to panic, you're not going to lower your costs or changing stuff in your life. 2.7% is nothing. It's like $60 on 2.5k. So that's not what you're going to do. But if you're having an energy bill going 2x, or wood is going up insane, or like everything is going up by 2 or 3x, and you are stating that the purchasing power is 2.7% dropping, you're either just saying bad stuff, or you're lying to the people, or you're just misinformed. It's funny, Denzel Washington once said, if you're watching the news, you're misinformed, or if you're not watching the news, you're uninformed. And actually, if you're looking back to the previous months, that's definitely the case. So that's why we're here. We're trying to make a proper view on the markets. We're trying to give some updates on the markets in itself. I'm still not feeling too great. I'm not having corona. I'm just I don't know. I'm just having some reaction of the past weeks being in Cape Town, coming back to the Netherlands and stuff. So please, I'm sorry for my voice. My voice is not the most beautiful one, but today it's even worse. But when we're looking at the markets, we have been seeing Bitcoin chopping around quite heavy. We have also been seeing the equity markets dropping substantially. But if you're looking at the equity markets that have been dropping approximately 20% in terms of war, it's actually not too bad. So then you get into a question in which, technically we could be arguing that there is going to be a financial crisis. If there is such a big supply chain shock, if the inflation is so high, and today we're going to get those inflation numbers. This video is made before we actually got the inflation numbers coming in. But we're going to get those numbers. The inflation is quite high while the interest rate is quite low. If that stays and the prices of products are even running up more, the inflation will just shoot up even more. Salaries are not going up that much. We have a war. So if you look at all those factors, it's actually quite okay or decent that the markets are not correcting more than that. So then you get into a question of, okay, we should be going down even more given the impacts on the markets. Also given the fact that we're giving Russia some sanctions, which is going to impact our economy as well. So you would argue that the equity market should be dropping even more. But what are we going to get if the status of the war remains like this, or we're going to keep fighting? We might be delaying the interest rates hikes, as the war is going to be the focus, especially if Russia is going to take over more of Ukraine. The fear will be higher. And then risk-on assets could be doing well as the interest rates remain quite low, and the situation remains like this for a year or so. It could be a chance that we're going to have another run up with the equities and another run with crypto too. Very slim chance, but it's something to keep into mind, that maybe after a period of correction or even more of crypto, we could be getting such a situation in which we're going to have another run taking place on the equity markets. creating a bigger gap between the real economy and the stock markets. And at some point in time, few years from now, we're going to have that big financial crisis. And that's why we are here. That's why we are making those analyses. That's why I've got the platform 8 Global, to make a change in your life, in which we are here to analyze the markets, making proper risk assessments, making proper portfolios, so you are making the best decisions for yourself, instead of shilling some bullshit altcoins that literally do not make sense, despite that it's making sense for me as the one creating the content. Many channels do that here. I think there are not many channels making good content, or at least they deserve a bigger spotlight. And I'm just gonna make content that I like to do. So from the next weeks onwards, we're going to make probably some more videos if I've got time enough for that. I have to head towards Dubai and Miami. We're going to make videos from there as well. But right now, first, what we're going to do after this intro, which is quite long, we're going to look at the equities and Brent and gold first. After that, we're going to look at Bitcoin, and after that, we're going to look at the altcoins. So let's head towards the charts, in which we're going to cover the dollar, the equities, Brent and gold. Let's head towards them. So when we're looking at the equity markets, we can look at the European stock markets first, in which we can clearly see that we are having a deep correction here. So right, we've had a beautiful run back up, right? This is the Corona crash, all the way back up without any retest at all. Big run, and we've just erased the entire run of Q4 of last year, or Q4 of 2020 all the way towards 2021. We've erased it as we are having a deep correction here, which is resulting in a correction of 23%, which is also reflecting the impact that the European markets are having as sanctions against Russia, but also the impact that the war actually has to the European markets. More or less, what do we see? We do see a big bounce back up in the weekly, right? We've had a big rush back up, resulting into these green candles that we can see here. So we've got this correction, and actually, if we're looking at the Corona crash, which was approximately 40%, if we are correcting with 23% when it comes to these markets, that is not a lot actually. And it could be a reason that we're just going to continue moving up if we are having that scenario as we just discussed. If we're looking at gold, we've had a nice sweep of the high, right? We are making new all-time highs against the euro. We'll already be making new all-time highs, but when it comes to the dollar, we've also been trying to attack the high here, and actually have been sweeping this high, in which it immediately rejected and started to correct south. It's also a sign of panic. People rushing into gold is a sign of panic, because people are running out of risk on assets towards risk off assets, and risk off assets are the US dollar and gold. And in this case, gold has been showing this strength here, but also silver has been showing some momentum. And I think that silver especially still has a lot of momentum to go for, and it could be somewhere in this region as we are here, and it's ready for a big rush still to come, especially when there are times of uncertainty. Gold in itself, if we are staying above certain levels, I think we can just keep on grinding up. So if we are staying above $1,900, we are most likely going to keep the continuation here. But when we're discussing times of uncertainty, we should also be discussing the US dollar. And the US dollar has been showing strength, because the US dollar is actually going to hike the interest rates, while Europe is not doing that because of the war. So where are people flying to? The US dollar and gold. Those two assets are the ones that you should be watching. If the US dollar and gold are both going to correct even more, that is probably going to be the time where equities and also crypto can start running substantially. But right now, the US dollar is in a significant uptrend. We have been correcting a little here based on the block that we've had, and then the war started, resulting into some further upwards momentum on the US dollar, which is also showing the impact on the euro against US dollar, which is currently definitely trending down. And if it's going to lose any of these two levels, I think we are even going towards parity. So times of uncertainty, people are flying towards the dollar, people are flying towards gold. And that is also why you should be watching those charts if you are trading Bitcoin, as then you can get into a conclusion of Bitcoin being in a bull or bear market. If the dollar is running up substantially, like we have been doing in 2014 to 2015, Bitcoin has not been showing the best period actually. If we're looking at the times of 2016 to February 2018, the dollar has been showing a very rough period, and that was the time where Bitcoin has been doing great. Since then we've had a bear market, and that was the period where the US dollar was doing quite good, or actually been running up. And since March 2020 until May 2021, we again had a bull market on Bitcoin, while the US dollar has been showing weakness. And now the opposite is happening, and we already know that altcoins are down 80 to 90%. So there is some sort of correlation, or at least argumentation, to be found if you're looking at the US dollar in combination with the markets in itself of crypto. So finally, Brent. The Brent Oil is running up. I have to get some fuel as well in the coming days. Not going to be too happy with it, but I think it's topped out quite soon. Governments are stepping in to avoid any excessive runs. The expectations are that the embargo or the sanctions is going to keep the prices up even more, but that is a classic example of buy the rumor, sell the news, in which we're most likely going to get a corrective period on Brent after it has been taking all the highs here, all the liquidity there. I think the actual rush to the upside is done for now, and we're looking at least some sort of correction periods towards $94 and maybe even $85, and that's going to calm down the markets a little bit. So that is the all-round view of the markets. What does it tell about the Bitcoin prices at this point, and what can we expect? That is the next chapter of this update. So we've just been covering the markets in itself. We have been seeing that gold is running up because of uncertainties and panic reactions. We have seen the dollar running up because of the same principle, but also because of the fact that they're going to hike the interest rates. And we know that the impact of the interest rates is also having destructive reactions on the crypto markets, as we have been seeing those heavy price shocks when that news came out. So the interest rate hikes is going to be released very soon. It's going to be a volatile period, and especially next week it will be when the news is coming out. So what is the implication for the markets for Bitcoin at this stage? Well, to be honest, short term, I'm not seeing that bullish market at this stage yet. I think we will. I think that the markets or the fundamental aspects are growing, especially when you're looking at a war or when you're looking at Canada, that there is an actual use case for crypto to be released, and that is only growing the adoption. That is not being reflected into the price action of Bitcoin at this point, but the gap between the fundamental growth and Bitcoin price action, that is only going to increase, and then at some point in time it's going to be running back up to the actual fundamental levels it should be, and then it overshoots to the upside. So the fundamental growth is super important to keep an eye on. But if we are looking at the horizon that people are looking at for trading, there is not really a case where you should be rushing into positions of crypto at this point, especially given the heavy rejections that Bitcoin has been making in the past period. So we're going to look at the price action of Bitcoin at this point. I'm going to look at it in a daily and a 4-hour time frame to see where we are standing. And I think that there are a few scenarios that we should be looking at, and that's what we're going to discuss next. So Bitcoin in itself and the price action, I think it's quite simple, right? We've got those liquidity sites. And the question is, which one are we going to take? Because that is going to trigger a heavy volume move. So what do we see on the price action of Bitcoin? Well, we've got this recent highs, right? So we've had this rejection at 45.6 and this entire level that we clearly need to break if we want to have any bullish momentum. What do we see even more? We are seeing that we've had this recent low at 32.8 earlier this year, and we are seeing that we're making higher lows. However, those higher lows are tricky. The trend is still down, and in order to have a reversal, you want to take all the liquidity, so you've got enough orders to actually take or to buy into when you want to reverse. So when you are having those liquidity sites here and those longs that are in the market, they have to close if they get stopped out or if they get liquidated. So when something gets stopped out and liquidated, there will be an order from the other side into the books, resulting in the close of that position. So for instance, if you have 1 mil that gets stopped out at this 36.8k level, there will be 1 mil in the books in which people that are wanting to get into the market will be buying into that position, and that is usually a result of a higher volume candle and a reversal taking place. What do we see even more? We've had those beautiful bounces back up, which all the way correct every time. So the question here becomes whether the markets are going to have a breaker above 46k, or whether we are going to take these lows and have one more wick into this region here, maybe even lower, because if we take 33, the chances that we're going to take 29 is going to be there. But overall, I think we're going to have ultimate bottom here. But at least if we're going to have some more downwards momentum, are we going to take those lows? That is enough liquidity to reverse the markets, and then we're going to have a new bull cycle taking place depending on the fundamental aspects of the markets. So we've had entire corrections of the pushes, even the corrections or even the recent run of yesterday towards 42.4 has corrected even more, as we couldn't even hold 41.7, and because of that level not holding as support, we have corrected all the way back again. So this is a nasty candle, and that's why I'm remaining relatively calm to the markets at this point. I think the odds of correcting even more are more substantial, in which we're going to take these lows, especially in this downtrend, than that we're going to have a break towards the upside. So if we're going to test the highs again, I think we're going to take the liquidity here, and then the question will become whether we're going to hold 46.1. However, we should be realizing ourselves that we still have a war, we still have the hikes, we still have the Fed, and we still have supply chain shocks that is impacting everyone's lives. So if we're going to have any push upwards, we probably are getting sold off even more, because people are seeking to rush towards the US dollar instead of being into Bitcoin at this point. And that is also the reason why the markets are having this heavy correction all the way every time that we are having any bounce. So at this stage, this daily candle is not resulting into further upwards momentum. I'm actually guessing or expecting that short term we're going to have some more corrective movements on Bitcoin before we're going to have a new bull cycle taking place. For me, if we break 46k and flip that level for support, gain it, that is going to be a trigger that we're probably going to test 55k. And that is for me a reason where I can expect altcoins to start doing well, and then I want to position myself again into the market. Right now I do not feel comfortable. I'm staying calm, and I think that if we're going to have a downwards move, that is going to be the moment that we're going to be stepping into the markets again, because that is the financial opportunities. But what about altcoins? That is the next chapter that we're going to discuss. Then we've had Bitcoin, and we have concluded that there is a most likely case that we're going to have some more corrections with Bitcoin, unless we break above certain important levels. And if we do that, we're probably going to have more confirmation on the market and more conclusions of the direction of the market, and then we can see altcoins doing relatively well. As right now, if we're looking at the altcoins are being sold off. The Bitcoin pairs are dropping substantially. Some of those altcoins have been correcting 80 to 90% against Bitcoin, against USDT since May already. Most of them have not been making a new all-time high since May 2021. Yes, specific altcoins have been doing that, but most of them have not been doing it, and they are down 80 to 90%. Especially the DeFi market is a market that has been correcting heavily. However, when altcoins are dropping so heavy and Bitcoin is going to, or at least correcting this heavy already, it is giving you massive opportunities. We see that the sentiment is not the best. We see that the engagement on social media is dropping substantially. Accounts are not growing too much anymore. Exposure for projects are decreasing. Projects are also delaying their updates because the market is not the right one to be in when you want to grow your project. And those are all factors that are currently making the altcoins drop even more, because retail is focused on altcoins, but retail is panicking and feared right now with the current movements of Ukraine and Russia, but also the Fed taking that into account. So altcoins are correcting, Bitcoin dominance is growing or going back up, and we are looking at a case where Bitcoin is finally looking to bottom out, or when it reclaims 46k. Those two reactions, including the fundamental aspects, would be a reason where altcoins are starting to fire up once again. So we're going to dive into Ethereum, and we're going to dive into a few more altcoins to see what they are doing and what I'll be looking at when I want to see a bottom formation when it comes to them. So when we're looking at the altcoins, we can definitely see that the altcoins are bouncing back up. Overall, the Bitcoin dominance chart doesn't really tell too much about the altcoins at this stage, as it's a reflection of ETH. I mean, if you swap this chart for ETH Bitcoin, you can definitely see the opposite, as ETH has such a big impact of the price action, or has such a big impact on the Bitcoin dominance chart. But we can see that it's running back up, which is actually a signal of weakness. If Bitcoin is making a bounce back up, you technically really want to see altcoins jump with Bitcoin, as that is a sign that people are definitely interested into crypto overall. If Bitcoin is bouncing up and altcoins are dropping, it means that money runs from altcoins towards Bitcoin, and it doesn't show that much of a strength. Right now we can see that ETH against Bitcoin is bouncing a little based on the fact that Bitcoin is correcting again. But you should question yourself how long that will be staying. Actually, ETH against Bitcoin is doing okay. I mean, we've lost the range high. So technically speaking, I think that we're going to test the lows here before we're going to have any reversal. So somewhere in this region, I would definitely be looking at ETH against Bitcoin, as we just had a fake out to the upside and are back in the range. When we're looking at other altcoins, for instance Cardano, we can definitely see that we're already in a heavy downtrend. So we've had a beautiful bounce in January, but currently we are just trending south. And yes, we've got a green candle today, but how much of an impact can that have if Bitcoin starts correcting even more? I think that people are going to sell their altcoins even more out of fear. And that is also why Cardano against USDT or the USDT pairs are showing this weakness at this point. In which Bitcoin is correcting, so altcoins are also correcting. They are bouncing a little in the Bitcoin pair, but it's not showing too much of an impact. Phantom against Bitcoin, also trending south. We might be concluding that we are into a support range here, but the trend is definitely south. And also fundamentally, we also know some stuff about Phantom at this point. And we can actually go through all the altcoins, and everything is showing a downwards trend. Does that say that it doesn't really give you any opportunities at all? Well, technically it is giving you many opportunities at this point, but we should be realizing ourselves that the markets are trending south. So everything is relying on the price action of Bitcoin at this point, and if Bitcoin is not going to give any strength or is going to take out those lows, it is very important to realize that altcoins will be doing the same. So right now the focus is mostly on Bitcoin. If Bitcoin is showing a bottoming signal, I think altcoins will start doing well too. But right now they are simply not the core focus. Coming to a conclusion of this update, the markets have not been giving too many returns, right? The equity markets have been dropping year to date. The Bitcoin has been correcting year to date. Altcoins have been correcting even more year to date. And the question of this update is whether Bitcoin is in a bull or in a bear market. Ultimately, it doesn't really matter how you're calling the actual market, it matters how you trade it. Bitcoin has been trending south and is probably still seeking for a bottom to be made. Altcoins in itself are also looking for that same bottom and are actually seeking for a horizon that is longer than a few days to feel comfortable again, so people can start trading altcoins even more. Right now, it's not the market that we're looking for to trade altcoins. Yes, stable coins are doing great. Luna is doing great. Some specific altcoins are doing great. But overall, the markets are not doing too much. and Bitcoin in itself is also still correcting from every push upwards. So coming back to that question of Bitcoin being in a bull or in a bear market, I think you can definitely say that we are trending south. And the more we are trending south, the more we are getting close towards a new bull cycle or towards new financial opportunities. Because at the actual low, that is the maximum financial opportunity you can get. But it's also the most difficult decision to make, because most of your friends and most of the people that you were looking at or you were talking to on the internet will be gone as the hype is away from the markets. Right now we can already see that the hype is dropping heavily from the crypto markets, but that's getting closer towards that actual bottom. We also know that the fundamental growth of crypto is insane. It's growing day by day. The adoption and network effect are growing day by day, but the price is not reflecting it. And that is a lesson for you. We might be correcting some more. We might be correcting some more with altcoins, but that's giving you the opportunities that you're seeking for. So it doesn't really matter how you call the market, whether it's a bull or bear market. It matters how you trade it. That is the update for today. Tomorrow I'll be back with an update on Phantom. Don't forget to subscribe beneath, like this YouTube update, that's helping me a lot, and I'll be back tomorrow. Don't do stupid shit and have a wonderful day.